Myself Vaibhav. In today's session, we are seeing that the Euro USD has been in the consolidation phase, and so far it has been able to successfully hold on to the 1.18 level, and as of now, it is even climbing higher, having gone closer to the 1.183. Now, I feel this consolidation is going to solidify the Euro's base around these levels, and in coming session we might even see the euro usd climbing back towards 1.19 level, and even beyond that towards eventually the 1.2 target range. Now, coming to that possibility, we will of course explore that in technical aspects of this session. Before that, if you consider the trading context for the day, the hopes of any near-term US stimulus measures for the economy have been dashed effectively as the US Senate has been adjourned for next couple of weeks, and I think now there is no possibility of the US stimulus bill passing through, and we will have to see how the results come for the US presidential elections, and only after that we will have more clarity on these possible measures from the US government. On the data front, we didn't really get any major release for the Asian trading session as well as for the European trading session. There were some minor releases, but we will not go into the details of that. Just a while back, we also got the US durable goods orders, and here the growth is substantial for the month of September, and we are seeing that in terms of month on month, the growth has rebounded to 1.9% compared to the prior month reading of 0.4%. But it varies from segment to segment. If we exclude the transport sector items, then the growth comes down to 0.8%. But if we only exclude the defense sector item, then the growth is even robust at 3.4%. So it is not evenly spread across the sectors. Some sectors are growing stronger while some sectors are proving a drag on overall numbers. We are also scheduled to get the CB consumer confidence data for the month of October, and not much of an variation is being expected from the prior month's number. We are pretty much likely to see the reading close to the prior month's reading of 101.8. Maybe it might it might turn out little on the lower side as the US economy is again experiencing the drag of rising coronavirus infection. So we will have to be watchful on that count. Now, moving on to the technical segment, here we will see the Euro USD's technical aspects first, and then we will also cover the dollar index. Let's start with the Euro USD's technical outlook. This is the daily time frame chart for the Euro USD, and as you can see, the Euro USD has started to climb back towards its prior swing high. The Euro USD has been in the uptrend since it consolidated and then started this rally closer to 1.08, and from there onwards there has been no stopping the euro usd. Of course, there have been some bouts of consolidation where it has corrected to some extent, and after the finding the buying support on the lower side, it has again rebounded. This time around also proving no exception, and as you can see for last couple of sessions we have seen it trading in a very range bound manner, and on the lower side, as I said, there has been firm base around 1.18. So keeping that in mind, we will try to see if there are any optimum opportunities for us to cut down on the possible losses in case we happen to be wrong, and to maximize our profit if we happen to be right. So we will see on the lower time frames that we have to keep in mind this central pivot point which is there around 1.178, and as long as the price is holding well above it, we can be fairly confident of its upward momentum in euro usd. And if we consider the regression curve is also bending on the upside. So both of these technical factors are pointing to the continuation of the upward momentum in the euro usd, and that should prove helpful from our perspective of finding the good buying opportunities. So on the lower side, we have this strong base around this central pivot point, and in the near term, there is not much of an resistance on the higher side. Of course, we will have to cross above this immediate swing high, but still that is around 50 to 60 pips away from the current valuation zone. So we have good amount of buffer on the higher side, and as I said, we have multiple factors which are confirming our expectations of the continuation of the upward momentum in the Euro USD. So we can indeed be confident enough of going in for the fresh trade. So if we want to go for the long trade, I would say that we will have to utilize this base which has been formed around these lower support levels, and as long as the euro usd is holding well above these 200 sma, and as I explained to you on the prior slide, we also have just a little lower the central pivot point support area also. So taken together, we have these couple of factors, and not to forget this prior swing low. So we can go for the buy trade anywhere in the price band of these 1.18 to 1.181, and on the higher side we can target then the immediate swing high or even beyond that, while keeping the stop loss. I think the price zone around 1.178 or just little below that should be good enough. So if we are going in for the buy trade anywhere in this support zone, we can utilize these prior swing lows, and then the central pivot point zone to act as our near term stop loss. And on the higher side, we will be targeting at least the bare minimum stop loss target ratio of 1 is to 2, and to get that, if we are suppose taking the risk of around 30 pips, we will need to target around 60 pips. So as I said, we can target the prior swing high, and we will be good enough at that level. And as I said, we are also expecting the euro usd to eventually climb above this immediate swing high or even go towards the 1.2. But even if we don't really wait it out till those moments, we can be fairly confident of this 50-60 pips move, which is pretty possible. So that's the euro usd's forecast on my side. Now moving on to the dollar index. The dollar index has been in the consolidation phase with the downward bias for last couple of months now, and for the dollar index this month has been no different. Of course, we saw this climb on the higher side in the prior month of September, but in the October it has been all downhill. Of course, in the middle of the month we saw this some recovery, but again after finding resistance closer to the 94 zone, we saw the dollar index again is slipping on the lower side, and here it has been consolidating and struggling closer to the 93. And here in near term, the 93 zone is likely to act as a strong resistance. And if we get any opportunity to go for the fresh short sell trade around this price area, we should go for it with possible move towards this immediate swing high, swing low, which is there around 92, and eventually a break below that is also pretty much possible. The dollar index has fallen quite quite substantially, but still it is in the bearish zone, and we can't really put a floor to what extent the dollar index might decline. Coming to the 4 hourly chart, here both these technical factors, the regression curve as well as the pivot point series, are pointing to the bearish formation in the dollar index. And on the higher side, if we want to figure out the immediate resistance zone, we can utilize this central pivot point of this month's pivot point series, but that is also around half a percentage point away from the current zone. So that's not really close. And if we think about any near-term support on the lower side, then I think we will have to wait till this first support of this month's pivot point series, which is pretty close to the 92, which is also its prior swing low level. So we are kind of caught in between the strong resistance zone and the support zone. There is not much of a technical factor which might help us at the current junction. The continuation factor is there, which is telling us that we can expect these bearish tendencies to persist. And after this consolidation phase, we can safely think about going in for the fresh short sell trades. So we have to target this consolidation phase highs. I think, as I said, the 93 is proving the difficult hurdle to cross for the dollar index, and that can give us some opportunity to figure out and pinpoint the entry points for the possible short sell trades. So coming to that, I think we will be in good position if we go for the short sell trade anywhere below this below or closer to the 93 zone, and on the higher side we can keep the stop loss little above this 200 SMA. So stop loss anywhere around 93.3 or 93.4 should do the job for us, and as we have seen the dollar index struggling on multiple occasions to hold and cross and hold above this 200 SMA, we can be fairly confident that this time around also it is going to be no different. Of course it can be different, but that's why we use the stop loss. In case our anticipation goes wrong, we will have to book the losses and get out of that position instead of waiting and hoping that someday or sometime this trade will turn in our way. So that's not how it works. If you happen to be wrong, you have to get out of the trade without any emotions, and that's what we will do also. So we are going in with the stop loss, and the price band of 93.3 to 93.4 is marked for the stop loss zone, whereas we are looking for the fresh entry anywhere around the immediate swing high to 93. So 10 pips price zone is also available for us to target the fresh short sell trades, with the possible targets coming in even below this immediate swing low, which is there at 92.5. So we will be getting the risk reward ratio of even better than the 1 is to 2 in case we are willing to wait for the dollar index to fall all the way towards its support zone of 92. And if you want to get out of the trade earlier, we can do that as well. So that's it from my side for today's session. If any of you have any query or any idea to share, you can comment in the uh, you can write in the comment section, and I will be happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and of course, one should be careful while using the information provided. Don't forget to subscribe to our channel and stay updated on the happenings in the financial markets. Thank you all for joining in. Goodbye.